Good morning, I'm Maiki Oreta, and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. A fragile ceasefire still holds between Iran and Israel, but the region remains on edge. Philippine officials downplay the impact, saying the Middle East conflict poses little threat to our economy. And world leaders descend on The Hague as NATO sends a message of unity to Russia. A fragile ceasefire is holding between Israel and Iran, but markets are still on edge, and the stakes for oil and global trade remain high. On Tuesday, U.S. President Donald Trump accused both countries of violating the truce. But Iran and Israel insist they won't make the first move unless the other strikes first. That same day, Israeli Prime Minister Benjamin Netanyahu declared victory in the war against Iran, a claim that could reignite tensions anytime.
אזרחי ישראל היקרים, ב-12 הימים של מבצע עם כלבי,
Dear citizens of Israel, during the 12 days of the Operation Rising Lion, we achieved a historic victory, and this victory will stand for generations. We removed from upon us two immediate existential threats: the threat of annihilation by nuclear bombs and the threat of annihilation by 20,000 ballistic missiles. If we had not acted now, the state of Israel would soon be facing the danger of annihilation. But that did not happen.
Intelligence sources say last weekend's U.S. strikes on 3 Iranian nuclear sites failed to cripple the program. CNN reports the attack only set it back by a few months, and Iran's stockpile of enriched uranium remains intact. Global markets rally as investors welcome a fragile ceasefire between Israel and Iran and look to the Fed for rate cut signals. U.S. stocks surged Tuesday, boosted by hopes that the truce in the Middle East will hold and by Fed Chair Jerome Powell's comments before Congress. Investors are now pricing in a rate cut as early as July, even as Trump, who announced the ceasefire, lashed out at both countries for violating it, using what he called the strongest language.
Chair Powell's testimony today is really consistent with what he said after the meeting, which is very much wait and see. He believes that he can wait to see more economic data come through and is looking to either see evidence in the next 3 months that tariffs really have very little impact on consumer inflation, or is there more deterioration in the labor market that they need to get ahead of from the Federal Reserve. Now, we did have a couple of speakers, Waller and Bowman, come out and talk about perhaps a July cut.
The Dow Jones Industrial Average higher by 1.2%, the S&P 500 higher by 1.1%, and the Nasdaq climbed 1.4%. Now, markets in Europe closed mixed. The FTSE 100 flat with an upward bias. Germany's DAX higher by 1.6%, and France's CAC 40 up by 1%. Now, the Energy Department downplays the impact of the Middle East conflict on the Philippine economy, but warns that could change if global oil prices spike. Acting Energy Secretary Sharon Garin says the conflict's impact remains minimal for now. Her assessment echoes that of the Department of Economic Planning, with both agencies saying that the situation remains stable as long as prices stay contained. Garin says President Marcos has ordered economic managers to protect the most vulnerable, including farmers, fishers, and PUV drivers, from the impact of any oil shock. The Philippines imports nearly all of its fuel, making the economy highly exposed to global price fluctuations. Any escalation in the region or supply disruption through the Strait of Hormuz could change the outlook instantly. The Philippine economy is seen growing faster in the second quarter, but still short of the government's targets. The University of Asia and the Pacific projects 5.6% growth for the second quarter, slightly faster than Q1's 5.4%, driven by stable inflation and a stronger labor market, plus the elections. But the forecast is still well below the 6.5% recorded in Q2 of last year. and still under the government's full-year target range of between 6 to 8%. S&P Global, one of the world's big three credit ratings agencies, now sees the Philippines as one of Asia-Pacific's fastest-growing economies through 2027. S&P just upgraded its Philippine growth forecast to 5.9% this year from 5.7% previously, and they say that the country's economy could hit 6.6% by 2027. This places the Philippines, together with Vietnam, as the second fastest growing economy in the region over the next 3 years. S&P says strong domestic demand and lower tariffs between the U.S. and China could redirect trade flows, giving economies like ours a boost. The Department of Energy says its smart and green grid plan, crucial to the Philippines' energy future, will be ready by September. Designed to transform the country's aging power infrastructure, the plan will enable the seamless integration of renewable energy at scale, including 50 gigawatts of offshore wind and 4.8 gigawatts of nuclear power by 2050. This modern grid will also help stabilize prices and reduce dependence on imported fossil fuels. By connecting remote renewable sources to urban demand centers through new transmission corridors and sub-sea cables. The DOE is developing the project alongside USAID's Energy Security Initiative, the University of the Philippines, and state-run Transco as part of a broader push to boost energy security, affordability, and sustainability. On another front, Filipino-Chinese business leaders say crime fears are costing the Philippines tourism dollars and undercutting our potential as a world-class destination. Federation President Victor Lim says that the country's natural beauty is unmatched, but safety concerns continue to scare off tourists. The Philippines drew nearly 6 million visitors last year, still lagging far behind Thailand and Malaysia, each welcomed over 20 million. The Federation is now backing calls for a full-blown security drive in key destinations, along with faster visas and better transport links to boost arrivals. They're also urging urgent airport upgrades, warning that if infrastructure and safety don't improve, tourism growth will stall. Despite global crises and a weak peso, the number of millionaires in the Philippines is still rising. But as global capital flows shift, the question is whether the country can keep that momentum or get left behind. Sujin Kim has the details.
Despite escalating global tensions and surging commodity prices, the Philippines continues to create wealth. According to the 2025 Henley & Partners' Private Wealth Migration Report, the country now boasts nearly 12,800 millionaires, 70 centimillionaires, and 12 billionaires, reflecting a 32% growth in the ultra-wealthy segment over the past decade. Still, the report estimates that around 50 Filipino millionaires will migrate abroad in 2025, far lower than regional peers like Vietnam, which is expected to lose over 300.
So, not a big number. And actually probably not something to be very concerned about. Philippines, compared to its regional neighbors, is losing much less.
This year, global wealth migration is expected to reach record levels. 140,000 millionaires will relocate internationally in 2025. This number could rise to 165,000 by 2026.
This year marks the largest voluntary transfer of private capital in modern history. Wealth migration signals a global shift in economic power, so it's not just a demographic trend. Countries are racing to attract both talent and capital and reshaping financial hubs and prosperity zones.
The United Arab Emirates is set to lead, attracting 9,800 millionaires this year, representing a capital inflow of around $63 billion in investable wealth. On the losing side, the United Kingdom will see the biggest exodus, over 16,000 millionaires leaving, taking an estimated $92 billion with them.
This is the largest single-year outflow that we've ever seen. Brexit continues to prove to be a bad bet to attract and retain high net worth individuals, but the real genesis of this huge outflow comes from major tax changes that were confirmed in 2024.
As oil prices climb and the Israel-Iran crisis unfolds, more high-net-worth families are seeking alternatives and Plan B destinations.
Any instability in global politics or global markets, including influxes in commodity prices, create insecurity that would push families to consider optionality. When it comes to these conflicts globally, or when it comes to economic shocks, it's important that families have other options.
The firm also sees opportunity, saying a weaker peso could offer an opening for foreign investors.
With a weaker currency, it would mean that foreigners coming in can afford more, so would make it more attractive.
As millionaires and billionaires shift across borders, the challenge for the Philippines is to capture a share of this trillion-dollar capital flow and turn it into investment gains. Soojin Kim, Bilyonaryo News Channel.
We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's check on how Asian markets are doing this Wednesday morning. Right now, the Nikkei 225 is in the green, higher by 0.2%. Hong Kong's Hang Seng Index up by 0.9%. Shanghai's Composite flat with an upward bias, and Singapore's Straits Times Index up 0.6%, all tracking the gains in Wall Street overnight. Here at home, Philippine shares snapped out of a two-day losing streak yesterday, climbing 1.2% to close at 62.93. The rebound tracked global markets after news of a ceasefire between Israel and Iran and a sharp drop in oil prices. Value turnover, however, slipped to 5.8 billion pesos, while foreign funds offloaded 286 million worth of shares. Now, traders say risk sentiment could hold if the truce sticks, and the U.S. Federal Reserve if they stay on track for a rate cut this July. Checking on the PSE index as of 10:18 this morning, the main gauge is in the green following the gains across Asia and Wall Street overnight. We're higher by 0.6% to 63.29. The broader all shares index up as well, up by 0.4%. As for the sub-indices, we're looking at a bit of a mixed picture. The financials, holding firms, property services, and mining and oil counters are trading in the green, whereas the industrial counter is flat with a slight downward bias. Now, total volume traded thin so far at 84 million shares, valued at just 558 million pesos. Market breadth is positive. We've got 70 advancers, 43 decliners, and 48 stocks unchanged. Now, at the currency market, the peso opened stronger at 58.80 to the greenback, appreciating from Tuesday's close of 57.16. Now, ceasefire between Israel and Iran may bring temporary relief at the pump as global oil prices start to dip. As industry player says, if the truce holds, the fuel hikes here at home could slow or even roll back by next week. The government is now in talks with oil companies to delay a fresh round of price increases slated for later this week. But analysts warn that this is just a short-term fix. The real solution lies in cutting our dependence on Middle East oil through strategic fuel reserves and a shift toward renewables. Until then, Filipinos remain exposed to global shocks and conflicts which are beyond our control. Now, the Energy Department says it cannot suspend taxes on fuel despite mounting public pressure as global oil prices continue to climb. DOE officer in charge, Sharon Garin, clarified that only Congress has the power to amend the law and lower or remove fuel taxes. This comes after transport groups took to the streets demanding the repeal of the oil deregulation law and the abolition of fuel taxes. Garin explained that while the law allows for suspending future tax hikes, it doesn't permit tax rollbacks. She also stressed that fuel taxes bring in over 300 billion pesos a year, helping fund infrastructure, education, and public health. Now, tensions in the Middle East are driving oil prices higher, and the Philippines, as a net importer, is feeling the pressure, with Iran threatening to close the Strait of Hormuz, a choke point that moves a fifth of the world's oil. Global markets are on edge. The Marcos administration is rolling out fuel subsidies and reviving talks of a strategic petroleum reserve to protect the country from future shocks. The question now is, will the Philippines keep scrambling every time there's a global crisis, or will we finally build the shield of our The Philippines imports a lion's share, 95 to 99% of our oil, making us very vulnerable to global supply shocks. So the need for that relief is apparent, Congressman. That said, what exactly is the Strategic Petroleum Reserve Plan you envision, and can you walk us through how that would work and what strategic advantage it would give us?
Well, first of all, we really need a strategic petroleum reserve. Why? We're import dependent on oil. If there's disruptions in the shipping routes of oil, conflicts in the Middle East, automatically we are affected. This happened during COVID when supply chain disruptions happened. This happened during the Ukraine-Russia war, where $180 barrel price increased. It reached $180 per barrel. No? So this will continue to happen, especially now that we have tensions in the West Philippine Sea. Can you imagine if there's a blockade? We won't have oil. So, we really should have a strategic petroleum reserve. Ideally, we should have a 90-day supply. Based on estimates, it will cost around $4 billion to set this up. If we don't have the money, let's do a 3-year plan and spend over $1.33 billion a year. At the end of the day, we really need this. Again, we are energy dependent, import dependent on oil. This is part of a strategic, multi-layered, comprehensive energy security plan. It's about time we do it. The U.S. is doing it, India, South Korea, Japan. More so for the Philippines, where, as mentioned, we are 90% oil dependent for imports.
Yeah, we are so vulnerable to this. We need a comprehensive energy security plan. Congressman Villafuerte, the Philippines consumes nearly 500,000 barrels of oil daily. How big of a reserve are you envisioning? Maybe 3 months, 6 months? What's the ideal size of that actual stockpile to meaningfully cushion us against any global disruption?
Well, ideally, according to the International Energy Agency, it should be 90 days. If we can't afford it, let's do a step by step. Let's start with the 15-day, 30, 45, 60 until we reach 90 days. At the end of the day, we should start it because we talk about this when there are disruptions. No? We talked about this when the price of per barrel of crude oil increased to $180 per barrel during the Ukraine-Russia war. Now, Israel-Iran conflict. Again, even if there's no conflict, we can use this as a strategic buying strategy. Why? When price of oil are high, we don't need to buy so much because we have a reserve. When price of oil has gone down or low, we buy to increase reserves. So this is not only part of the energy security strategy. It can also, it will not only cushion impact on disruptions, it can be a strategy for, lowering price of oil when prices are high. So again, we're also typhoon prone. We should think about this. And I would like to reiterate, the tension in the West Philippine Sea is apparent. Can you imagine if there's a blockade on the shipping route? Wala tayong oil.
Yeah, that's something to take into consideration. Now, Congressman Villafuerte, some would argue that, if we set up a strategic petroleum reserve now, while tensions are flaring in the Middle East and while oil cost is high, wouldn't that defeat the purpose? But then again, all of this depends on how long it would take realistically to put one up, to establish it and operationalize it.
Well, if you start one easily over a year, so by then hopefully prices have stabilized. But the price of oil now is actually a little lower than last year, despite the disruption. So there's really no perfect time to set this up. The only time we should do it is now, because if you're saying that the price of oil is very high now, it will take easily a year 12 to 18 months to set up a reserve anyway. So by then, hopefully, prices have stabilized and lowered them. We can start building up reserves.
Speaking of costs, this could cost our government billions. You just said about maybe 4 billion, depending on how big that supply is. What are your in terms of those cost estimates? Where would that money come from? And if the national government finances it, how do we do it? How do we finance something this big without blowing up the deficit? What would be the most realistic funding model for something this gargantuan?
Well, we can fund it in the General Appropriations Act. We can borrow money abroad. I think at the end of the day, there's so many. The government needs so many funds for doing so many things. It's just a matter of prioritizing. If you don't have $4 billion, let's set up $1 billion a year, or 800 million US a year. It will take 4 or 5 years. All we need is really the political will and the commitment to do this. No? When there's a will, there's a way.
Do you think we'll have that political will in this 20th Congress, Congressman Villafuerte?
Hopefully, hopefully there's more congressmen who will support this bill. Again, it's not only the Middle East tensions. No, think in the context of the West Philippine Sea tension disruptions. Right now, China has already positioned themselves in the West Philippines. Imagine if they block the routes.
Yeah.
That's very disastrous for the Philippines.
Yeah, there's a lot to hedge against. Congressman Villafuerte, does this need new legislation, or can Malacanang act on it now? Can the president
Malacanang can act on it
yeah?
immediately, but that can be supported by legislation. Legislation is needed, for example, if you want a 3, 4, 5-year plan for budgetary appropriations. So it's clear. Let's say we want to build a strategic petroleum reserve for 40 million barrels for a 90-day supply. We can do it on a 3 to 4, 5-year budget appropriations. That's where you need legislation. But setting it up now, I think the commitment, the president can just issue an executive order in this regard, do a study, determine the location, determine how many days they want, and source the funds from there.
Establishing a strategic petroleum reserve, it seems to go against another initiative, another big initiative, and that's to go green. How do we balance both? I mean, we can't ditch oil overnight, but at the same time, how do we balance the need to take care of our oil needs now, and at the same time take care of our need to go forward with going green and reduce our dependence on fossil fuels?
Well, as part of a comprehensive energy security strategy, we should be less dependent on fossil fuel. No? So we should promote renewable energy, electric vehicles. But while we're promoting that, let's admit it will take easily over a decade or more to shift to this. Right now, we're trying to promote electric vehicles for transportation, for day-to-day travel. But at the end of the day, public transport have to shift. But you have to accept the fact that we're so energy dependent on fossil fuel that it will take easily more than 10 years to shift. So what will happen in the next 10, 20 years? We don't even have enough charging stations for people to transform to electric vehicles. I'm not saying not to promote electric vehicles. We should. But while we're doing that, there should be a parallel strategy also. At the end of the day, people will not shift to electric vehicles 100% anyway. They will do a hybrid, and when it's hybrid, you still need fossil fuel. That's where the oil reserves still come in.
Yeah. Okay. Now, speaking of that oil reserve, this isn't your core. You're a lawmaker, but by how much do you think it would help reduce prices if we are able to establish this petroleum reserve?
Well, definitely, this strategy is to cushion disruption spikes in prices. When, for example, it reaches 100. For example, in the U.S.-Ukraine-Russia war, it reached over $180 per barrel. The U.S. government, in order to cushion the global impact, released hundreds of millions of their reserves as part of the global supply strategy. So it cushioned the impact. It lowered the price. In the context of the Philippines, when it reaches over $100 and you buy it only for $70 or less per barrel, you can sell it at the cost you bought it at a lower cost. Then the inflationary effect of this in the economy will be huge, billions daily. So that's important. That's the strategy.
All right. Thank you so much for your time, Camarines Sur Governor-elect Congressman El Rey Villafuerte.
Thank you so much. Have a good day.
We're taking a short break. Business 360 will be right back. Welcome back. More Filipino workers in the Middle East are looking to come home as the ceasefire between Israel and Iran hangs by a thread. The Department of Migrant Workers says over 300 Filipinos in Israel have requested repatriation, citing safety fears despite the truce. The first batch, 31 OFWs from across the region, landed last night after flight delays caused by airspace closures in Qatar and Bahrain. The Philippine military says it's on standby, ready to help bring stranded Filipinos home from the Middle East. The AFP confirms it's backing the government's repatriation plan for Filipinos in Iran and Israel as tensions simmer despite the ceasefire. The military says contingency plans are in place, and while questions persist about EDCA sites, it's all systems go. All hands on deck, ready to deploy if needed.
Point now, we would not want to speculate on anything that's happening. We would want to hone in on the role of the armed forces of the Philippines. At this point in time, we are prepared for any contingencies. We are, of course, doing our mandate and our mission accordingly. And all of this, ang pinaka-focus natin is yung repatriation to make sure that ang mga kababayan natin will come home safe.
From I want a bloodbath to dismiss the case, Vice President Sara Duterte has filed a formal response to the Senate impeachment court asking to throw out the complaint on technical grounds. Her camp entered a not guilty plea but argued that there are no articles of impeachment to answer and that the case violates constitutional rules. The House prosecution panel isn't buying it, saying VP Sara is backing off her own call for a bloodbath and hiding behind procedure.
Ito yung tinatawag na wagging the dog, na mas pinapalitaw na mas importante ang procedure kesa constitutional law and principles, substance. Ang importante is the substance. Those who cannot address the substance, they rely on technical procedures, which is what she did here.
They have 5 days to reply and say the trial is moving forward. The ICC prosecution is pushing back on former President Rodrigo Duterte's bid for interim release. Prosecutors argue Duterte should remain in detention to ensure he attends hearings and doesn't obstruct the ongoing investigation. They also warn he's still highly influential, pointing to his recent win as Davao City Mayor in the midterm elections. On another front, what if the country's next economic crisis isn't a recession, but a health issue? Obesity now costs the Philippine economy over 2 trillion pesos a year, hurting workforce productivity, inflating healthcare spending, and putting millions at risk. And unlike a pandemic, this one's been growing quietly for years. Sujin Kim has the details.
2 trillion pesos. That's the staggering cost obesity and its complications are draining from the Philippine economy, eroding healthcare funds, undercutting worker productivity, burdening businesses, and limiting the nation's ability to invest in other critical services. Obesity has become an economic weight, straining public insurance systems and weakening industries such as BPO, manufacturing, and office-based jobs.
Just imagine 2 trillion pesos. How much vitamins you can give, how many hospitals you can support, the lesser burden for the local government to provide funds for the medicines.
The cost isn't limited to hospital bills. Billions are spent on dialysis, kidney transplants, and angioplasty. Life-saving procedures, PhilHealth covers due to obesity-related diseases. Hemodialysis alone costs PhilHealth over 28 billion pesos every year. Kidney transplants and angioplasty add hundreds of thousands of pesos per case to the burden on public funds. Businesses suffer too. Obesity-related sick leaves and hospitalizations cut into output.
If you're obese, all these illnesses, you cannot, if you're a little bit stressed, tataas na agad yung BP mo. Itataas na agad yung sugar mo. So anong tendency mo pag nalang ako pumasok? So that's productivity loss, right?
Every day of absence erodes productivity and hurts the economy, with costs rising. Experts stress that the solution lies not only in treatment, but in strong preventive and promotive healthcare programs that must be supported by both the government and the private sector.
Whole of government, whole of system, and whole of society approach is very important. The government cannot, and the government won't be able to solve everything, but it really needs and it really asks for private involvement and participation.
Data show obesity is a burden shared by all. Under PhilHealth's cross-subsidization system, healthy members shoulder part of the cost of those who are ill.
Because we function under the principles of bayanihan, wherein the healthy subsidizes the sick, the rich subsidizes the poor, and the young subsidizes the adults. So at any point in time, there is always a cross-subsidization between members from the direct and the indirect.
The EPICOB PH study, the country's first in-depth analysis of the economic burden of obesity, aims to build a model for smarter health budgeting, corporate wellness investments, and national policy reforms. Sujin Kim, Bilyonaryo News Channel.
We're taking a quick break. Business 360 will be right back. United. The meetings are meant to signal resolve despite earlier criticisms from the U.S. and to strengthen NATO's defense posture against Moscow. Ukrainian President Volodymyr Zelensky warned European NATO states they could be next if Russia isn't stopped in Ukraine. Trump is expected to meet with Zelensky to discuss strategies for increasing pressure on Putin. The Kremlin, meanwhile, accuses NATO of rampant militarization, saying it's using Russia as a friend of hell to justify massive defense spending. On another front, Israel's war with Iran may be grabbing global attention, but its assault on Gaza is far from over. Airstrikes continue to pound the enclave, pushing Gaza's death toll to nearly 56,000. In the last 24 hours alone, 51 more Palestinians were killed, over 100 injured. Hospitals are overwhelmed. Children are pulled from rubble and rushed to crowded wards as the humanitarian crisis deepens by the day. In another continent, U.S. Health Chief Robert Kennedy Jr. faces tough questions from House Democrats, but says he's committed to fixing a broken system. Kennedy is defending budget cuts to the U.S. NIH and CDC, saying it's all part of a broader push to make public health more transparent, accountable, and effective. He's under fire for firing all 17 CDC officials and naming new members, including some with controversial views on vaccines. But Kennedy says the goal is to restore trust and open scientific debate. While the moves are raising eyebrows globally, the U.S. remains a health innovation powerhouse. If reforms succeed, they could reset how the world thinks about public health leadership.
Now, I know Senator Cassidy had concerns about your views on this. And so when he voted to confirm you as Secretary of HHS on February 4th, He explained that decision by saying on the Senate floor that, quote, if confirmed, you will maintain the CDC's Advisory Committee on Immunization Practices without changes. But then 2 weeks ago, you fired all 17 experts on that very committee. Mr. Secretary, question for you. Did you lie to Senator Cassidy when you told him you would not change this panel of experts?
I never made that agreement.
So are you saying that Senator Cassidy lied when he was on the Senate floor, lied to the American people?
I didn't see that statement by Senator Cassidy. I've only heard it from you, but if he said that I agreed to it, it would be inaccurate. I made an agreement with him. I made an agreement with him, and he and I have talked many times about that agreement.
My time. I just want to tell you that for most of us sitting here right now, we believe Senator Cassidy more than we trust you when it comes to vaccinations. It sounds to me like you gave him the answer he needed to hear in order to get his confirmation vote. And then as soon as you were secretary, you turned around and did whatever you want. You fired all 17 members.
And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.